As I mentioned earlier in this chapter, I will introduce another income which bypasses the income statement. Income statement reports the earnings or net income that are realized. There's another income called other comprehensive income that is earnings to be realized. So comprehensive income has two components. One is realized, reported in the income statement, and unrealized or to be realized, it is reported as OCI or other comprehensive income. The income statement reports all the revenues, expenses, gains, and losses that are either realized through sales of goods and service or sales of assets, settlement of liabilities, or expense incurred and losses that were recognized. Other comprehensive income represents the change in the financial position. So for example, if a company invests in the stock market or in the government securities, so if the fair value of these securities appreciate, that means the value of these investments increase. So how to account for this increase? Since this company still has the title of this investment, that means the company has not sold these assets. So these gains has not been realized. So we account for it as unrealized holding gains. Similarly, this applies to the unrealized holding losses. And to account for this, we use other comprehensive income. And if a company sells an investment, the gain and losses will be realized. You will see the unrealized holding gains or losses will be transferred to the income statement and reported as gains or losses. But before these investments are sold, we use other comprehensive income to account for the change in their positions. So here is an example. A company report comprehensive income. First report is realized earnings. And this line above we borrowed from the income statements. And this is the bottom line of income statement. And following the realized earnings, we have the item that represents the unrealized holding gains and losses. This represents the change in the financial position of these assets or liabilities. They are still reported in the book of the company. So these gains and losses are waiting for realization. And the total change of the position is 30,000 because 100,000 subtract 50 and 20,000. So the total other comprehensive income is the sum of these two, 530. So this is also an example of statement of comprehensive income. It reports realized income and unrealized. Also, here the $100,000 was reported as gains on debt securities. So this represents the unrealized holding gains for these debt securities. If we assume the company sell this debt security, then the $100,000 gain will be realized. If that's the case, the $100,000 will be reported in the income statement. Similar to the earnings in the income statements, the unrealized holding gains or losses are reported as net of tax. There's two ways to report other comprehensive income. We can report them in a single statements or report them separately because they have different characteristics. Let me introduce a personal example. So if you invest in Apple stock, for example, you purchase the stock for $1,000 today, and tomorrow the Apple stock price change. We just assume the stock price increase. Now your financial position increased from $1,000 to $1,100. So the $100 gain is not realized until you sell your position. So if you don't sell it, it's just a number. If you sell it, the $100 will be realized, and this gain will be reported in your 1099 capital gain form. So you need to pay tax for this gain. But if you don't sell it, the $100 gain is not realized, you don't need to pay any tax. So that's the difference between unrealized and realized earnings. For companies, we report these two separately into two statements. Both income have impact on the company's financial position, but both have different implications to the companies, to the investors and creditors. Similar to the net income, the earnings, if the company pay dividend after we subtract dividend, the difference will be recorded as the increase or decrease of retained earnings during the year. And retained earnings is an account in the stockholders' equity. And OCI, other comprehensive income, either positive or negative, will be reported as the change of accumulate. Other comprehensive income. Retained earnings, you can think it is accumulate unpaid realized earnings. In the balance sheet, we report the accumulated amounts into these two accounts for realized earnings and unrealized earnings. While in the statement of comprehensive income, we report these two. So here is an example. In the statement of comprehensive income, we include the company's earnings, that's from income statements, other comprehensive income, $30,000. This represents the change to the balance of retained earnings and accumulate other comprehensive income. So in the balance sheet, we can see from prior year, the retained earnings increased $500,000. So in this example, I think it assumes there's no dividend declared and paid. And accumulate other comprehensive income increased by $30,000. Here, what I circled is statement of comprehensive income. It includes income statement and statement of other comprehensive income. This represents the change to the stockholders' equity. The change will be reported as a change in the balance sheet. So here, that's the T accounts of these two. Here is another example of comprehensive income, and it is reported as separate statement. The top line is borrowed from income statements, the earnings, the realized earnings, while this section reports all the unrealized holding gains and losses. The sum of them are total other comprehensive income or loss. The sum of both is comprehensive income. Net income 1,628 million. Other comprehensive income 188. They have impact on the balance sheet here. The retained earnings increased. it increased by the difference of net income and dividends. Yeah, this company paid dividend 431. So beginning balance 1,993, ending balance 3,190. Here is a change, which represents the earnings subtract dividends. While another column represents the change of accumulated other comprehensive income. It begins with 198, accumulate other comprehensive loss because it was negative. This year, 188, other comprehensive income. So after this change, the ending balance of accumulated other comprehensive income become negative $10 million. The total shareholders' equity unaffected by classifications. Yeah, no matter the company report $10 million gains or unrealized holding gains as other comprehensive income, the company's stockholders' equity increased by the same amount. The only difference is in the first case, the gain will be reported as the increase in the retained earnings, while the second one is reported as increase in the accumulated other comprehensive income. And unrealized holding gains and losses will finally be realized, so they will become realized gains and losses. And we can also say the other comprehensive income and losses are candidates of gain and losses reported in the income statement. So here is a multiple choice question. Income from sales, obviously this is realized. Others are unrealized losses from securities available for sale, foreign currency translation adjustments, deferred gains from derivatives. The change of these three are due to the factor that cannot be controlled by the company. Unrealized loss is due to the market change, market price of the available for sale securities. This is due to the change in the exchange rate, and this is also related to the change in the value of derivatives. That's why we should report them separately, because realized income and unrealized income have different implications to the investors and the creditors.